Hey guys, what is going on? Welcome back to Human Learning, and this is Stock Picks. And the stock we'll be going with today is Alibaba. I mean, you guys have probably seen all the videos, the articles that have been coming out about how Alibaba is, dirt cheap, but it also may keep falling. But the thing is, with a lot of these plays, when you have stocks that go down over 20, 30, maybe even 40% like Alibaba, you need to know where Alibaba's true value is and where they get it from. And so that's what I kind of wanted to go over today. And so this article that came out literally just 2 days ago, why Alibaba is basically goodbye as of right now. They talk about basically, even though there is this crackdown, um, uh, one of the biggest things is that they will get taxed more and this will hurt their revenue. But in the long run, what I'm saying is that this is not going to completely take down Alibaba 40% of what they were currently or originally valued at, close to trading at 300 something dollars per share. And basically, the bottom line right now is that the US market, yes, it's going to be very fast paced, very fast growing, but the Chinese market, on the other hand, they will be bigger. There's no ifs or buts, but the Chinese market will be bigger. And because of this, I think Alibaba, being e-commerce, one of the biggest ones out there right now, will do extremely well in this market. And right now they're saying that the fundamentals say Alibaba stock should be selling for at least $240 per share, and that's where he got about it last time at true fair value. And I think that, from just if you want to really look at the total revenue and compare it to like how they've performed over the years, I mean, since 2018 to now, they've basically tripled their revenue. And in terms of gross profit, they've almost doubled it just in 3 years. But those weren't the only things I wanted to really go over, but also other statistics. I mean, we always do this, right? So trailing PE, we have a 19.57, and the under 20 PE is something that we really like to really get the value companies there, those value stocks. The PEG ratio 1.6, yes, it's a bit high, but again, extremely good for as large of a company as Alibaba is. Price to sales is a bit high, 3.7. That is definitely something that Alibaba's been working on getting down over the years. I mean, as you can see here, trading at 8 or 9, then 7, 6, 5, 3. They can keep bringing that down, and I think that'll be extremely good. Again, the price to book at being under 3. For being a gigantic market cap as like large as Alibaba is, currently at $440 billion, I think anything under 3 is extremely good for the price to book. And this being under 1, their enterprise value to revenue is extremely good as well. And EV to EBITDA, basically we were just looking for this under 10. I mean, and this being at 2.27, these at least very few fundamentals wise, Alibaba looks extremely good. And so, we like using tip ranks and market beat, and that's what we're gonna keep doing. Right now, we have 23 ratings for a strong buy in Alibaba, putting around $270 upside. And in terms of market beat, we can see, 75% upside all the way to 303, another 26, 27 or so ratings here. But again, the only thing I really worry about with Alibaba is their basically technical setup right now. I mean, they're way below. I do can see a run up to maybe like 180, as of right now, maybe 181. But I believe that this like line that I drew in right here, it'll be a huge line of resistance. Again, if they can break through that, getting back up to like the 190s, maybe even low 200s is possible. But you know, in the short term, I don't exactly like Alibaba, even though this stochastic is finally starting to go through the sweet spot here. That I do really like, but I think Alibaba, in terms of value play, in terms of long term, you can't really go wrong with this. I mean, trading at just 20 times, their PE, and when you compare it to companies as large as Amazon, and if you can see here, Amazon right now, Yahoo's saying, 21% estimated return, very bullish outlooks on everything, and they're trading at 60 times, you know, 60 times their earnings, and Alibaba right now is trading, I believe, under 20, if not at 20. Just based on that, Alibaba can be easily, what, 515, $520 company. I think that Alibaba, this is an amazing play for the long term. Again, we did only go over a few fundamentals, but I don't think more is really need to be said. If you can catch Alibaba, keep going lower and lower, that'll be awesome. I was able to catch Alibaba on its very quick dip down to the 155s here. But there still may be some downturn here. I would be start to get worried around if they drop below that 150 because of the psychological level. But other than that, guys, in my opinion, I'll just keep buying into Alibaba. Even if 170 is the price you enter at right now, I still see them hitting probably like 185 within a year from now at an extremely conservative standpoint, and about 10% return in every year. Again, this is if Alibaba just does consistent numbers and not the exponential numbers that they've been doing. But yeah, guys, that's basically all I have today. If you guys have any other questions, leave them down below. Hope you guys have a great rest of your day. Peace.